Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on August 1st. We got Ian Saunders here, joined by Chuck Fuller, portfolio manager. Chuck, it's good to have you back in here.
Yeah, good to be here.
It's weird to have the end of the week at the start of a month, but that's where we're
That's where we're at.
that's where
Yeah.
we're ending. So we're recording this podcast on the 31st. Hopefully, going to get it out by this afternoon. Actually, but if not, it'll come out in the morning there. But trying to crank through the editing a little bit quicker, so no pressure.
Yeah,
So we'll
that's
see.
fine.
But when we're coming in, we've been doing the past few weeks. Last week we were lucky enough to be joined by Tom Dorsey back in the office. Always good to see Tom.
Yeah,
But
yeah. Yeah,
yeah,
it's been a while, so yeah, it's always great to see him. He's doing really good. So
yeah, doing well in good health. It was great to see him. So
yeah.
definitely be sure to check out that episode. Miles had a great conversation with him, talking about a lot of different things. They got into the AI conversation. We'll
Hmm.
dive into that a little bit.
Yeah.
But it's good to see TD doing well,
Yeah.
and good to have him back in the office too when the market's just hitting all-time highs.
Yeah,
It's like
exactly.
he comes back in, market hits a high
Yeah,
that day, I
good
think.
luck charm.
Yeah, exactly. And when we're coming in, I mean, we're looking at so when the past few weeks been looking at five different things typically. So today we're going to hit on some stuff from the S&P, talk a little bit about some AI data
Hmm.
that you've been looking at, Chuck.
Okay.
Then looking at participation, maybe some volatility stuff, and if we have time, wrap up with some small cap
Okay.
picture. So
Sure.
just to kind of lay the land for those listening, Chuck, when we're looking at the S&P, so you are one of the portfolio managers
Hmm.
here, and I know that you obviously we have portfolios in multiple different areas, but
Yeah.
a lot of stuff focused on the domestic equity side of things,
Sure.
and
Yeah.
a lot of conversations recently have been focused on, hey, markets are moving straight higher at all-time highs, overbought. Do we still want to jump in?
Yeah. Yeah.
I mean, how does that look?
Yeah, I mean, I think we're still fine to be invested. I think especially that the market seems to be climbing a wall of worry.
Hmm.
That's one of Tom Dorsey's kind of famous sayings, and really it's kind of a Wall Street adage. But we had this event, with the tariff Liberation Day blow up back in April. And yeah, the market obviously has just gone straight up since. And I think it's one of these rallies that's just hated. People don't want to believe that this is possible. We're supposed to just, collapse from all these, things that are going on. But the market's saying, nah, I don't think so. I think that
Yeah.
there's something going on here that's beyond the headlines. Um, and so, yeah, I think it's completely reasonable to invest here, even though, yeah, we're at all-time highs. There's also the study that came out somewhat recently, looking at if you invest at all-time highs versus at other times. That
Right.
yeah, investing at all-time highs is actually better,
Right.
right?
Right.
Because
Right.
again, it kind of feeds into what we do with the whole momentum thing. Like
Mhm.
when the market has momentum, then that's not the time to be squeamish with it.
Right. I mean, all-time highs is the biggest breakout
Yeah,
possible,
right,
right? And like
exactly.
that's what we're playing most of the time, trying to
Yep,
play the breakouts. I mean,
right.
that is the epitome of demand exceeding prior demand because
Yeah.
it's marking that new high,
That's
right?
exactly right. And I think another thing to keep in mind, if you look at the S&P chart, yeah, it's overbought right now. Looking at, kind of shorter term measurements, specifically like our weekly overbought oversold ranking,
Hmm.
it's basically right around the 100% overbought level. But for it to kind of pull back to a more normal level, that would cause the S&P to come back to 60/50. It wouldn't feel great, but that's not the end of the world. That's just a nice normal exhale in the market.
Well, the other thing, and we've talked about this before, I think, sitting in these same chairs, is that you talk about it, you don't that trading band can normalize. It doesn't have to just pull back to the middle.
Yeah, that's exactly right. Right. So most people think that, yeah, that's what it has to do.
Have to go lower.
Price has
Yeah.
to come down. The other aspect of it is that because it's looking at 10 weeks of data, well, if you can have what I call like a correction in time versus a correction in price. And so when the correction in time happens, which is kind of just you're just, you know, going sideways for a bit, the trading band will move up to catch up with it, right? So in other words,
Hmm.
you would just see the middle of the trading band right now, it's at 60/50 on the S&P. You would see it climb to, 61/50 and 62/50. And, eventually you would reach, where the price is now. So I think, I think we're more likely to see that with the kind of momentum that we've seen in the market. That tends to be when you see, the kind of the correction in time versus price.
Right.
Anything can happen, but put a little bit more stock in that happening versus, the pullbacks.
Right. And even if we did get, let's say we got a pullback to the midpoint on
Yeah.
its trading band, if we had hit a 5% pullback on the S&P,
Mm.
that's about just below 6,100.
Yeah, right.
So I mean that is
Perfectly normal.
very normal
Right,
and
right. It
and,
happens
and
all the time.
sometimes ideal, honestly,
Yeah, yeah.
to get yourself a little bit of get the jitters out a little
Yeah,
bit, right?
that, and I think it shakes out some of the weak holders, and
Yeah.
then
Yeah.
you're back up in the uptrend after that. Because really we're not seeing too many things under the surface right now to make us think that there's something going on that could lead the market lower.
And a lot of the worries, I think that what could lead the market lower is all this AI spending, right?
Yeah, right.
And that's like, hey, companies are dumping all this money into AI, or is it a bubble? Is
Yeah,
Nvidia going to fall out of bed? Well, it did, and then it rallied all the way back up to be
yeah,
the first $4 trillion company, right?
yeah.
And now we got another one with Microsoft as of this morning. But you were talking about some pretty interesting stuff. I mean, we can go into the Microsoft chart, honestly, is kind of scary to look at. You could talk about climbing a wall of worry. That thing is just straight
Oh
vertically
yeah,
higher.
right.
But you were talking about another chart that was looking at things not from a technical point and figure perspective, but with some research from JP Morgan looking at some AI data.
Yeah, yeah. So they're always looking at, the amount of money that these what they call the major AI hyperscalers are spending. So think of these as like the really big companies who are just spending, just boatloads of dollars on
We're
build
talking the Mag 7 type, but
yeah,
yeah,
building out their AI infrastructure.
right.
Specifically, so they're looking at like, Alphabet or Google, Amazon, Meta, and Microsoft. So really just
Okay.
those four.
Well, yeah, because
Um,
Apple's not doing anything.
yeah, Apple's not really. I mean, they're
And
doing AI, but they're doing more partnering with OpenAI and some different things.
and all these companies are just paying Nvidia, so they're not including it.
Right, exactly. Yeah. So, but the interesting thing is, I mean, obviously the amount of money that's being spent is pretty wild. In 2024, JP Morgan's reporting that there was about $200 billion spent on these rollouts.
The 199, they could have just thrown in an extra
Yeah,
billion.
yeah, it
Like,
says
come on.
199 in the graph, right? And they're on pace, this year to hit 278 billion. So I mean that's a 40% increase in costs, right? That they're spending. And I mean, really over the next few years, it's looking like they're going to get close to spending, almost all their operating cash flow on these AI rollouts.
Mhm.
Which of course that's people know that and think, man, this is crazy. This can't be profitable. You're going to end up holding on to all these data centers and whatnot, and they're not going to have anything to do because it's going to be a bust, right?
Right.
That's the worry. But again, you see the earnings that came out from Microsoft and Meta last night. Obviously they're up huge today, and so they're finding ways, even though they're spending right. They spent $200 billion last year, which was a massive increase over the year before that. They're finding ways to make profit with this,
And
and
they're
it's not
projecting
it's
this.
not just Nvidia here, right? These are
Right.
the companies spending the
Right.
money on Nvidia stuff, right? And they're finding ways to turn it into earnings. So everybody compares it to like the internet craze in the late 90s, but there were no revenues, there were no earnings. It was all hope,
Right.
right? Here there's actually earnings, right? Now the question is, can they keep it up,
Can they keep it
for
up? That's it. Yeah.
quarter after quarter, year after year?
Right.
That's to be decided, but so far so good.
And
Um,
I think it's interesting too, if you look at those, I mean, we've talked about this on prior podcasts and it's been out there in the financial ether, but if you overlay our current like growth of I think it was Nasdaq 100
mhm.
with the 2000s time frame, like even if this is a similar to that, like we're still
Yeah.
in the really early innings of a bubble.
That's my thing.
Yeah.
Yeah, it's like you can, whenever I think about the 90s, I go back to Alan Greenspan's comment where he says that, we're in a period of irrational exuberance, because the market was going up, so much. And what people forget about that is I think that was like in late 1996. You know what I mean? You still had another 3+ years of bull market to
And
go.
honestly, with hindsight, we know like, oh my gosh, 2000, 2003 was coming,
Right.
but that's still three more. I mean, we're talking
Yeah.
about 2028.
Right. Yeah, exactly. Like if you were to like go to cash now and that kind of thing happens, even if you do get a
You're never
50% sell
recovering
off,
that.
you might still be above where you
Yeah,
fell now,
right.
right? Could be. So it's always a hard thing to kind of see what's coming, before, because you just don't know when that actual event is going to happen. And that timing really does matter.
Yeah, and that perspective, I think, in looking at and when we're looking at a 50-year back test, a 3-year period seems really small.
Right.
But when we're talking about actually from here for the next 3 years, like especially from an advisor's perspective, that is you lose clients.
Yeah, that is, and that's what matters,
Yeah,
right? So
right.
yeah, it's huge. But yeah, I don't think, even though these companies are spending, crazy amounts of money on this stuff, it doesn't seem to be an unwarranted bet yet. So we'll just have to keep an eye on it.
Got to see what happens.
Yep.
Yeah. I mean, when we're looking at going back to the other aspects of the market, looking at the maybe diving from here to some of the VIX readings.
Okay, sure. Yeah.
When we're looking at some of the VIX stuff from here, the we can look at the point figure chart for the VIX. I think looking at the 1 point chart makes it look a little more. Um, you can just see more on the
Less no
page,
less noise.
frankly.
Yeah,
Yeah,
right.
less noise. It's down at relative lows that we've seen for the year. So back at the lowest levels that we've seen so far in 2025.
Yep.
But that's kind of normal. From
Yeah.
it would be abnormal if it remained higher for longer,
Yeah. Oh,
right?
yeah, yeah, yeah. Usually when the VIX goes high, it's not for very long, right?
Yeah.
Because you're getting some kind of crazy event in the market, like what we had back in April. Yeah, and like what did we spike up to there? Like 60 on the VIX. Like
Right.
that doesn't happen very often. And of course we've come down. We're at 15 now, but yeah, it tends to like to hang out. Somewhere between 15 and 20 is kind of what I would say is normal.
Hmm.
And so, I think a thought a lot of people are having is, okay, we're back to these lower levels, so that means the next event is right around the corner. But I don't really think that that's the case.
It doesn't have to be the
Yeah,
case.
it can waffle around here for long periods of time. It's certainly months and sometimes years, before you get the next event that, causes it to spike again. I think also because we're in such close proximity to an event, right, just 3 or 4 months ago,
Hmm.
that it spiked. I think that creates a situation where, we're more likely to kind of waffle around here for a while.
Right.
And what happens with a lot of this stuff, when it gets low, it invites people to come and sell vol, either, whatever, through futures or options or however they do it. And when they do that, they're betting that you don't get any kind of spike in the VIX. And if they don't, then they can just sit there and collect the premium, right?
Hmm.
Um, I think when you have an event that's so close, that's fresh in people's minds and makes fewer of them willing to do that because they remember what just happened to them,
Yeah.
if they have been doing it.
Do you
So
think that the amount of people maybe doing that is less because of like CRDT options and everything too?
yeah, I mean, I think you just have more options to do, different
Yeah.
things. So yeah, might not be doing that as much now. But like I said, it's just we're so close to having an event happen. Anything could happen, but I don't foresee it. And we're not seeing any other of the telltale signs of an event either,
Right,
right?
right. Yeah, I mean, so things are S&P's at highs, but we're seeing VIX moving lower. It's relatively normal ranges. On the more fundamental side of things, on the AI companies are still looking I mean, impressive, but
Yeah,
not insane.
right. Yeah.
But when we're looking at things from a participation standpoint,
Hmm.
how are things looking there? I know I think the last time we had you on was prior to the what was it called, Liberation Day. And
Yeah, right.
so, at that point, we hit a divergent state in the market late last year, and we
Yeah.
were kind of waiting for something to happen.
Yeah, yeah. So yeah, we got a divergence in the market, probably around December of 24. And what we mean by divergence is just that the market's near highs, but the average stock isn't, right? Usually you want those things to coincide, right? You want the average stock to kind of be up if the market's, near highs.
Right.
But we were definitely seeing, underneath the surface, a lot of stocks selling off.
That was just the Mag 7 holding everything up.
Right, he is basically all the big guys that were holding it up. So usually when that happens, not all the time, but a lot of times, is you get some kind of event, you know. And when I say event, these divergences, they happen in bull markets. So we're not talking about, some crazy, crazy event, but usually you get something that's gonna, pull you back, more than just a normal correction, more than just like 10%. It's gonna be 15, maybe 20. Um, And so we ended up getting that obviously with
We're at
the
19.8.
yeah, right. Which it's that's a whole other conversation.
Yeah.
How many times it gets right at 20
Right, right.
and then bounces right off.
NDX at 20. So that's it.
Yeah, there you go. Right. So yeah, so we had divergence back then, got the event obviously in April and things have bounced up. So I think a lot of the question is, are we okay now? Right. And it seems to be like when you look at the participation indicators, like things like the 10-week for the S&P,
Near term readings,
yeah,
but
more near-term things or the high-low. These are measurements of participation or breadth. They've all gone to uh the other end of the spectrum, right? They're all up, around highs, or close to it. And looking at, something like the advanced decline line, which is another measurement of breadth, it hit new all-time highs before the market did,
hmm,
right? So, there's all these measurements of breadth have basically come back. You can look at the TW right now and it's up, around 70 and kind of moving sideways for a bit.
right.
And it could pull back some here, and that'd be fine. But yeah, we're not seeing any of the divergence like what we saw at the end of last year that tends to precede these kind of events. So that's good. In other
Yeah.
words, we're at all-time highs. We're not seeing any of
We're in a normal
yeah,
market
any
state.
of the telltale signs that something's up underneath the hood.
It doesn't mean something can't happen,
Yeah,
and
things
we
can
have the
happen.
indicator. That's why we look at all this stuff,
Yeah,
right? To
right.
to
You,
see
you
what it
need
is.
you need the soulless barometer,
But at
right?
least all the lights are green right now,
Yeah, I mean there's not too much
which we'll mark that there as the top because
yeah, you did
all the
exactly.
lights are
That
green.
that's
But
exactly right.
yeah, that's why we look at the stuff there. I mean, but so looking at when we're looking at the other side of the coin though, this is obviously we talked all about the S&P,
Mm,
whether it's the chart, the earnings, the participation, the volatility, small caps.
yeah.
Not the same thing. Seeing improvement. I mean, you look at something like
They're,
IWM,
they're at least
I'll throw
rallying.
that up as the last chart. Yeah, it's a nice, perfect triangle
Yeah,
pattern
right.
for that chart. And you saw a very steady rally last year. I think they gave a lot of people hope.
Yeah,
Hey, small caps might be back.
right.
But then that just didn't come to
Yeah,
fruition. We've gotten a sharp rally higher. It's not like they're doing bad. They're positive back pot in the green on a year-to-date basis for
yeah,
IWM, but still relative to other areas.
yeah. Just
It's
lagging.
just not a place that,
Yeah.
yeah,
Yeah, it's I think it's just going to be hard. I mean, obviously the interest rates are still kind of wearing on them. Small
right.
caps have more floating rate debt, so higher interest rates hurt them more. That's obviously part of it. And then, I think something that doesn't get a lot of talk, but with all the tariff things or all the things with tariffs that have come out, there's for sure going to be a million exceptions to these things, right? There was in like his or Trump's first term.
Mm.
I remember reading something where there was something like 200,000 exceptions
People, all
to
the people lobbying to
everybody lobbying
take
for
that.
their,
Yeah.
to try to get preferential treatment. And I think the hard thing with small caps is like, okay, all the big guys, the Microsofts, the Metas, all those guys have insane lobbying for
Right.
like working for them. And so they're able to get, preferential treatment or they're more likely to get it than, the mom and pop, kind of small cap company.
Yeah.
Like they don't have that ability or at least not as much. And so I think in this new kind of tariff world, that's going to be a headwind for them.
It's just they can't weather the rate storm as well, and they
Right.
also can't weather the tariff storm
Right.
as well. And
Exactly.
so it's just kind of hit with the double whammy
It is.
of, I mean,
Yeah.
still a good looking pattern.
Yeah,
Buy
they're still moving
signal,
up.
column vectors, positive trend, below 1.4 fund score because of that
Yeah,
relative. There's other things can weather that have weathered the storm better. Even
exactly.
on domestic equities on the large cap side, international stuff. I mean, there's just other places for people to put their
Right.
money.
Yeah.
It's kind of what it comes down to,
That's what
right?
it comes down to is yeah, until they start showing some form of outperformance, it's you know, you're probably not going to see us allocate too much,
Right.
to that. So
Yeah. We'll see what happens over the next over the next few months since we had it's hard I heard my first back to school
no, I know
ad
it's
the other
coming.
day. It's
Yeah.
coming.
Yeah.
You're probably excited for
Yeah, I
that.
got three kids who are, all up into it. They're hating that the summer's coming to an end, and it's weird. I keep thinking of like, oh, it's not until Labor Day, right? Well, at
Right.
least where we live, it's like it's coming in like 2 weeks.
Oh, dang. Okay.
So yeah, it's faster and faster these days. So, but
Markets are faster, back to school's faster.
yeah,
All the,
can't get away from it.
there you
So
go. All right, cool. Well, Chuck, thanks for hopping on here with
Yeah,
us.
absolutely.
And everyone, thanks for tuning in and listening to us this week. We'll be back next week to hit on any other action.